All right, so like I was saying, trading is 95% psychology and 5% skill set. So, the simple part is learning the skill set, learning how to uh, draw your charts, draw your rectangles, Fibonacci, um, support and resistance, all those things in terms of those concepts. It all
Yeah.
encompasses the skill set. So
Okay.
you can navigate through the market properly. But the most hardest part is psychology. Just think about like how you move in your everyday life, right? How
Hmm.
you do one thing is how you do everything. So maybe in one area you're not disciplined, so that can translate in your trading. Let's say, you may be impatient on certain things that also translate in trading as well. So really the hardest thing is learning how to master yourself.
Okay. Yeah, I was reading some of the messages you guys were sending because I hadn't caught up on them, but yeah, that's what most of it was saying. Like you gotta learn how to like control yourself, or else it falls into, our trading what we're trying to do here. So that's one of the things too that interests me a lot.
Hmm. So yeah, personally, this have really taught me patience, taught me discipline. Um, Overall, not being greedy,
Hmm.
not impulsive. Those are things that I deal with in my everyday life. And like I said, it translate in my trading journey. So um, personally, I only trade one pair. Choose one pair, right? Build that relationship with that pair, understand the patterns, understand how it moves. Because once you understand how it moves, you're understanding the overall psychological patterns. You understand how that pair moves. You understand, okay, cool, during a certain point in time, this is how it moves during different news events. This is how it moves. All those things are being taken into account to understand the bigger picture. Now, when you're building that relationship or you're trading this pair long term, now you're starting to catch on to certain things. And once you build that relationship or build that rapport or what case may be, now you're going to be able to forever be in profit. That literally that one pair, in my
Hmm.
case, only trade gold. This pair can pay me for a lifetime. The moment that you master that pair is the moment that you will be able to be forever in profit, right? Instead of trying to focus your time and energy on trading GJ, AU, GN, GA, like that's cool and all, but it's not going to be sustainable long term,
Hmm.
right? So personally, I only trade gold. When I first started out trading, I only traded UJ, right? United States dollar versus Japanese yen. UJ is it's not too slow and it's not too fast. It's like that happy median. It's just right. Now, as you progress in learning the skill set, that's when you can, graduate to, faster pairs like, GJ or let's say gold or, if you was really on the on the riskier end, you'd be trading equities like US 30 or XPS 500, NAS1. Those are cool. But personally, that's not for me. That is
Hmm.
not that shit is like a fucking a bullet train in terms of its volatility. But gold, it moves, and when it uh once it finds its direction, it moves. Sometimes it can, consolidate in a range, but when it finally breaks out that range, that motherfucker moves, right? So, that would be one suggestion is finding that one pair that fits you, that fits your personality, that fits your psychology, and learn that pair, right? Learn the overall market structure, learn how it moves based off your structure, take all those things into account. And as we are, trading or looking for setup on gold, I'm gonna go over two concepts real quick. So we can take this home with us today. And right now, too, I'm looking for sales on gold. Previously, last week and yesterday, this thing just went crazy. Shit went crazy. From 1990, right? The price point, 1990 all the way to 2135. That is 1,040, hold up, 1,487 pips. So when we account that for, okay, how much money could we have earned if we would have been, or if we would have identified what price could potentially do. So if you would have caught that whole move, let's say your volume, right? You have your volume. So your volume is your multiplier, right? Or that's your money. Then you have your pips. Your pips is the measurement. So the measurement in which the market moves. So based off the market's going up and the market's going down, it is measured based off pips. So in order to understand, okay, cool, how much money would I have earned if I would have caught this amount of pips based off my volume? All you do is you multiply your volume times your pips. So let's say that your volume was 0.01. All right. That's 10 cents per pip. So based off the market going up and the market is going down, that equals out to 10 cents per pip. So let's say the market went in your favor 100 pips, right? And your volume was 0.10. What do you think? How much money do you think you would have earned on that move?
$10.
$10. Now let's say your volume was 0.10. That equals $1 per pip. So same example. Let's say your volume was 0.10, which is $1. We do a dollar times 100. How much will we have gained on that move?
$100.
$100. All right. Let's say your volume was 1.00. All right. 1.00. How much do you think that equals out to?
100.
$10
$10.
per pip. So if you would have caught 100 pips, right?
Mm-hmm.
On a standard lot or one lot order, how much money did we just earn?
It's valued at $1.
So 10 times 100,
Oh, 1,000.
$1,000. Perfect. Now let's say that our volume was 10.00. How much per pip do you think that would be?
I want to say 100.
Yep, per pip. So let's say, same example, we use a 10 lot order, which is $100 per pip. and we caught 100 pips. How much money did we just gain on that move?
Ooh, about $100,000.
10 bands.
10 bands.
10 bands. All right, let's do one a little more trickier. Let's say our volume was 30.00. How much does that equal?
That's 300.
$300. Simple. $300
Okay.
per pip. All right. So if we caught 300 pips, right? 300 pips, and we executed a 30 lot order, which is $300 per pip. How much money did we just gain?
I want to say 30,000.
300 times 300, what's that?
Oh shit. 90,000.
$90,000. 90,000. So in terms of your volume, right? The more money that you have in your account, the higher your volume can be. All right. And the only thing that doesn't change is your pips.
Mm-hmm.
When you first start out, what you want to focus on is catching pips. All right. Consistently 20 pips, 30 pips, 50 pips, 20, 30, 50, 20, 50, 30. Right. You want to continuously do that over and over again. And as your account grows, so does your volume. Right. Your volume changes as your account grows. But here's the kicker, right? Here's the thing. As your volume grows, so does your psychology. Your psychology has to shift as your volume changes. Because as your volume changes, the same way, let's say, right, um, you were used to doing a point 10, I'm sorry, point oh one. Let's say, you're down 30 pips. That's only $3 that you're losing at that point in time.
Mm-hmm.
But let's say instead of jumping from 0.01 to 0.10, you just jumped on the deep end of 1.00. So same concept, right? You're risking 30 pips, right? On the 0.01, that's $3 that you're down on that move. Now, imagine you executed a 1.00. That's $10 per pip, and you're down 30 pips. How much money are you losing right now?
I'm losing about $20.
$300.
Ooh, well, yeah, at the pip per pip.
Yep. So 10 times 30, that's $300 that you're down. Instead of, starting out,
3.
it was $3. So
Mm-hmm.
that's a big jump in terms of numbers, number wise. So this is where psychology come into play. So when you see, okay, cool, I'm down 300 pips. Oh, I'm sorry, I'm down 30 pips. Hope you're not down 300 pips. That's crazy. Um, but you're down 30 pips, 300 or $3. So as your account grows, so does your volume. It gradually grows as your account grows. So let's say now your account is at $3,000. So instead of using a standard lot, you use 0.10 to 0.30, which is $1 to uh $3 per pip. So same concept or same example, you're down 30 pips on a point one. that's $30 that you're down, or on a point three, that's $90 that you're down. So you'll feel a little bit more comfortable with seeing those numbers, right?
Mhm.
But again, as your account grows, your volume is going to grow as well. And as your volume grows, so does your psychology. And it's overall just getting used to seeing those numbers over and over and over again. The moment that you feel comfortable with seeing those numbers over and over again, that's when you can start to scale up and increase your lot size as your account grows. But if you're not comfortable with seeing those numbers or being in that drawdown, then you don't need to be executing that trade in terms of utilizing that lot size or that volume. That makes sense?
Yeah, it does. Cause after a while, if you keep using that one and your value goes up, you either aren't gaining as much as you were the first time.
Exactly. And then you're gonna be like, okay, cool, I want more. I want to make more. Because
Yeah.
I've been making $30 for 3 months now, for 6 months. I'm ready to level up now. Super Mario Brothers. Right. So let's go
Yeah.
ahead. Instead of putting a point one, okay, cool. Let's put a point three now.
Yeah.
Right. And then as you graduate, you're going to increase your lot size. And as you increase your lot size, if you haven't noticed, that's how you make your bread. At first, when you first start learning how to trade, you're not going to make as much money. Don't pay attention to the money. Again, don't pay attention to the money. Pay attention to the pips. Because again, your pips never change. If you caught 100 pips since day one, you're going to continue to do that. Like, that's nothing. You can literally do that in your sleep. Roll over, look at the charts. Oh, wow, here's the setup. Wow, 100 pips, close trade, like clockwork.
Yep.
And that's where you want to be. That's the rhythm that you want to create for yourself. And as you see, you're consistently doing that. Okay, cool. Let me increase my lot size. Make sense?
It does make you actually made it. I look at the graphs and I never know like what it is. I just know that they're measuring if it's going up or down. But now you got me on the vocabulary and everything. I'm
Yeah,
just taking down some notes real quick.
perfect. Let me know when you're ready.
Go ahead.
All right. All right. So yeah, as your psychology grows, so is your volume is gonna grow. Um, so yeah, that's the overall concept for pips and your volume. Um, Now let me go ahead and erase this. Oh yeah, this is what I was about to do. All right, so let's say, which is crazy, you took you had a let's say a 0.10, right? Which equals what
Uh, $1 per pip.
per pip. All right. And you caught this whole move, which was 1,570 pips. So if your volume was 0.10, right, which equals $1 per pip,
Mm.
and you caught this whole move 1,570 pips.
I gain all of that 1,570.
Yep, that's how much you made, or that's how much you'll be up right now. $1,570. Crazy.
Easy.
Simple. So
Yes.
let's
Simple. We
let's
don't like easy. We like simple.
yeah, simple. Cause listen, on the during the whole process of this, Price probably would have, been doing what you did. Was having his pullbacks.
Hmm.
It was having his pullbacks. Then that shit just took off. So in the whole process of that, this is where psychology comes into play in terms of managing your trades. So, and we're gonna go over this as well, but price, it creates a foundation. Price is just gonna just go straight up. Like it doesn't do that. Or price isn't just gonna go straight down.
Hmm.
It has to create structure. It has to create a foundation. This shit literally like life. Um, and yeah, let's moving on to our next. I like this transition. So we have two trends. We have an uptrend, right? In the uptrend, you're gonna see structure being created. All right. You're gonna see that. So you're gonna have your higher low, higher high, higher low, higher high, higher low, higher high. What's this?
Hello.
Oh what?
Hello. But I
Nope.
couldn't hear. Yeah, I couldn't hear the first word you were saying.
Yeah, so what were these again? Higher low,
High, higher, low. Okay, okay.
higher low, higher high,
Uh-huh.
higher low, because this low is lower than this low. Or well, I'm sorry. This low is higher than this low here.
Yes, yes.
So higher low, higher low. So what is this right here?
Higher, low.
Okay. And what is this?
Higher, high.
Higher high. Now, if we were looking for buy opportunities, right? Because in the uptrend, we should be buying more than we should be selling. You can't sell in the uptrend, however, that'd be counter trend trading. All right. If you're selling ever, if you are ever selling in an uptrend structure, do not get lost in the sauce. Right? Any sell opportunities in an uptrend is just going to be a short-term play. Short term. So if we were looking for buy opportunities in an uptrend structure, which points do you think we could be buying from? From a higher low point or from a higher high point?
I'd probably say a higher, low.
Yep. And why higher low point?
Only because it's a little. I would say we'd buy at the higher low because it's a little bit cheaper, but you're gonna end up getting your money at the end.
Exactly. Just like business. Or just like if we were doing commerce or being a consumer. We're not looking to buy at a higher price. That don't make sense.
Mhm.
If we ran a, let's say, e-commerce store and we was buying products, would it make sense to buy the product at a higher price and sell it at a lower price?
Definitely not. You're losing money.
Exactly. So when we approach that same, when we utilize that same concept and approach the markets that way, same thing. Why will we be buying at a higher price and selling at a lower price? Like that don't make sense. So exactly, you wanna buy at our higher low points or lower points, and we want to take profit, right? Take our money off the table at high points, higher high points. All right. And if we were looking for a re-entry, right, we want to wait for the pullback, retest. If there's no retest, no retest, no entry. No retest, no entry. So price doesn't pull back, right? We sit on our hands. The moment it pulls back, this is where we could be looking to get in again.
Mhm.
All right. And literally price can do this. It can play around. It can do this. All right. And create a new high. It can do that. Look at this right here. You see this bullshit. Shit crazy.
Mm.
Right. Literally was in the whole range. Whole range. Boom. Establish this low here, this higher low point. Price never broke beyond that point. Think about home, right? Right now, do you stay in an apartment or do you stay in a house?
A house.
A house. So under your home, right? What do you have that is maintaining that foundation?
Just everybody ran out. Everybody ran out putting in.
Pillars, pillars, pillars. If you go into your home right now, there are pillars under your home that is maintaining that structure.
Okay.
If you knock down those pillars, what happens to your house?
Ooh, knocked down my house.
That
Gone.
motherfucker is gone. You don't have no house no more, right?
Mhm.
So in terms of the markets, your high low points are your pillars. As long as your pillars, your high low points are being maintained, we're still good for the uptrend, right? So when we're looking for our entries, we want to identify first our last or where are we in structure, right? Well, first, what type of trend are we in? Second, where are we in structure? Are we at a higher high point or are we at a higher low point? Now, let's say price comes all the way back down to our higher low point, right?
Mm.
What we want to identify is how is price interacting, how it interacts with that level, and then secondly, how is price reacting once we do get those interactions. Once we get those interactions, okay, cool. Is price rejecting from that area? Did it break beyond that area a little bit, but we saw buyers come back in right after it broke, which is an overlap, right? We want to take all those things to account before we execute our buy opportunity. Now, once price interacts and give us those reactions, we react, execute our trade, let it go. All right, you already have identified how much you're willing to risk
Mhm.
in order for to see how price plays out. If it break beyond, let's say, this point here, we're out. We're done. Turns to take profit. If it comes to this area, okay, cool. We're securing profits. Let it go. Go about your day. Throughout the day, you can manage it and look at it and everything, but emotionally detach yourself from that trade. Right? When we are trading in the financial markets, we want to find ourselves at in a in a in a place of equanimity, right? Equanimity is being at peace. All right. You want to find yourself in a state of peace, not anxious, none of that shit. You want to be at a state a piece. If price hits your stop loss, cool. We already identified our risk. This is how much I was willing to risk in order to see if price can hit my take profit. If it hit my take profit, cool. Perfect. Fund tokens. Perfect. Right?
Mm-hmm.
And now we on to the next trade. The next day, the next session. All right. Make sense?
You got it like right on top of everything. I wasn't lost not one bit.
Perfect. Perfect. So that's an uptrend structure. That's how we overall those two things that I want to identify again. What type of trend are we in? Then where are we in structure? Are we at a higher low point or are we at a higher high point? Boom. All right. And I'm actually about to get in a sell opportunity on gold. Because look where we are right now. We had a high point. So we were looking for sell opportunities. Hold up. If we were looking, because right here, this shows that buyers took over the market, right? Right. If price is going up, that shows us that buyers took control, right?
Mm-hmm.
All right. So we was looking to buy. Do you think we'd be looking to buy from here?
Hell no.
Because now,
Worst mistake.
now we got this whole range. God,
Mm-hmm.
the price go all the way. You fuck. Right. So maybe not. Maybe price will break through this. Who knows? But at the end of the day, we want to keep it simple as possible. Buy low, sell high.
Yes. Too much risk.
Too much risk. It's more riskier to sell. On the buy than selling at this point in time. So that's a
Mm.
whole justification. So I am about to put in sell 2132. Sell. Boom. All right. So that's an uptrend. Our structure points and overall concept of how we can navigate through that example. All right, what do you think our next trend is?
Down.
A downtrend. Yep. All right. So in the downtrend, our structure, our lower highs, lower low, lower high, lower low, lower high, lower low. What's this?
That's the lower low.
Nope.
Lower high.
Lower high.
Lower low. I was just backwards.
Yep. Precisely. So we was looking to sell. What point of structure you think we'd be looking to sell from?
The lower low.
You sure?
Yes.
So we was selling from a lower low point. Will we be selling high or selling low?
I'm gonna say we're gonna sell high.
Yep. So if our lower low is a low point, Will we want to be looking for sales from lower low points?
No,
No. We'll be looking for sales from what point?
the lower high.
Lower high, right? Simple. Sell high, buy low. You can buy from your lower low points, but again, in a downtrend structure, you want to be selling more than you want to be buying. All right.
Okay.
So our lower low points. I'm sorry. Lower highs, lower highs, lower highs, lower highs. This is where we could be looking to sell from. Same concept again. No retest, no entry. So if price never comes back up, give us a retest, we're not entering. Boom, come back down. If it never comes back up, no entry. Came back lower high, entry. Lower low, no entry. Lower high, entry. Lower low, no entry. So we'll wait for what?
High.
It to come
Lower
back
low.
up.
Lower high. My bad.
Lower high. All right. Give us a retest. Price come back down. Make sense?
Yes. It's just backwards.
Yep. And also, so what was I about to say? Yeah, I lost my train of thought. What is this? The fuck? That's new. Damn, what I was about to say.
Are those more risky?
Which ones?
The downtrend.
No. So that's why it's important. First step is identifying what type of trend you in.
Mm-hmm.
Because if we're in a downtrend, then of course we want to be selling more than we'll be buying.
Mm-hmm.
So all we're doing is, I remember what I was about to say. All we're doing is identifying our lower high points, and then once we identify it, it's the same concept, based off the interactions and based off those reactions, that's when we could be looking for those sell opportunities.
Okay.
But yeah, what I was going to say is another concept that you can take away from this session, and also write down, you can put this in all caps. In order to understand what potentially can happen in the future, you first have to understand what happened in the past. I'm gonna say that again. In order to understand what potentially can happen in the future, you first have to understand what happened in the past. So all we do to simply understand what happened in the past is look left, look to the left, look to the left, right? Look to the left. If this is where we are currently, I'm gonna make this orange. Go Gators. So in order to understand what potentially can happen right here, we first want to look to the left right here, right? In the past, price came to this point, create a lower high point, which led into a lower low, right? So potentially what can happen here, same interactions, same reactions. In the past, it broke beyond this point, creating a lower low. In the future, you can do the same thing.
Okay.
Reject here, potentially create a new lower low. Make sense?
It does. Just I got a question on that. So on
What's
the downtrend, if we're buying the lower high and selling it, we're still we're still making more money even though it's going down.
No. So if we bought from a lower high point and
Mhm.
price was pushing lower, we're losing money.
Right.
All right.
So that wouldn't be too much of a good trade to get into then.
No, not at all.
Okay.
Once price come here, I
Mhm.
would not suggest ever, ever buying from a level of resistance, right? Think about your
Mhm.
home again. In your home, you got your ceilings and you got your floor. When it hits the ceiling, let's say basketball, it hits the ceiling, it's going to bounce down. Once it hits the floor, it's going to bounce up, right? So if you was looking for buys, you want to buy from low points. And I'm going to make this blue. You want to buy from your low points. And when you're selling, you want to sell from your high points.
Yeah. It's just like the other one but backwards. That's what was confusing me.
Yeah. Same concept with this one.
Mhm.
When I ask you here, do you think we'll be buying or would you think we'll be selling here?
Selling.
Selling, right? Because now we're susceptible to this whole range.
Mhm.
All this drawdown. If price drops and we're buying, we're losing money. Jesus, like, shit, even if you had a point one, if price went all the way back down from what's that, 2132 all the way to 1979, you're down $1,530. Even on a point oh one, right? You're
Yeah.
down $153, which is crazy.
Yeah.
On a point oh one, 10 cent. 10 cent just turned $153. So that means if you had a standard lot, that means $10 a pip. That means now you're down $15,000.
Yeah.
10 lots, oh my God, $153,000. That's how much you're down, which is crazy, right? So at this point in time, it would only makes more sense to sell than buying. Because if you're
Mhm.
selling, your range in terms of risk is just from here to here. Right.
Mhm.
So you're risking about 100 pips to gain 1,575 pips.
Right.
Say again?
You said I'm I'm gaining, right?
Yeah. So if you're
Yeah.
selling,
So worth it.
it's way more worth it.
Mhm.
Only risking 100 pips to gain 1,630 pips. It's crazy. That's a amazing risk reward ratio.
I really like this. I really like this a lot. It it keeps you like, focused for sure.
Hmm. And you just look at money differently. Like once you like start applying all the concepts and start navigate through the market conditions, like um everything is just gonna put a different perspective on how you make money.
I said that was badass. You taught me something in like an hour.
And I'm glad that you was very receptive to this information. You know what I'm saying? You understood it, and now overall, applying it. All right, cool. Sound good. Well, our next session gonna be tomorrow. We're gonna be doing these every day. Monday through Friday.